Imagine that you can trade stocks 24 hours a day, 7 days a week. That would be amazing, isn't it? Now that is called stock tokenization, and this is not the future, it's actually here, and we are going through that period where you will be able to do that anytime, anywhere, and the crypto world and the stock world is gonna be merged at the end. Now this video, we're gonna look at all the positive and negative sides of that. If you are interested in that, don't forget to hit the subscribe button, and let's crack on. So first, let's start with what is stock tokenization? How does it come up? Why do we actually need it? Now, the birthplace of that is actually diverted from the IPOs, the initial public offerings, when a stock actually starts trading for the public, and then you will be able to buy a share of a company which was private before. Now, the IPO process is quite lengthy, it's long, it's expensive, so not many people and not many companies decide to do that. We can understand that because it can cost from tens of millions to hundreds of millions to even billions of dollars to list and get floating from one of the stock exchanges. You need PR people, you need lawyers, you need attorneys, you need a lot of marketing for that, you need an investment bank for that, and the investment bank will be charging you about 89% of the total flow. So let's say that you have a company which is worth $1 billion, then 8 or 9% will just go to the investment bank to be able to float that share on the stock market. So it's a lengthy, long process. Not many companies want to do it, especially not many small companies want to do that. And the stock tokenization could be a solution for that because it's going to be cheaper, it's going to be way less expensive. You don't need any lawyers, you don't need, not any, but maybe you need a couple of attorneys, you need some marketing, and that's basically it. And then you can also cut that 8 or 9% fee for the investment then, because it is going to be on blockchain. So it's going to be available 24/7, but we're going to discuss that a little bit later. So how does it actually work? What is a stock tokenization? So it's basically a stock token that is listed, aka listed on a blockchain. You probably heard about CFD contracts, contracts for difference, CFDs. These are contracts that are based on the price movement of the underlying product. Usually it's a stock product or usually it's a commodity. So for example, if you buy, virtually you can't buy any gold except for gold ETFs, but that's another video topic. What you can do is you can buy gold ETFs. What that means is the price, you actually buy a contract. So a piece of paper basically, which represents it's not actually an ownership, but it's just a contract that says this contract will follow the price of the gold in every 24 seconds, in every 15 seconds. What that means is that you buy that contract, you buy that piece of paper, and then when you sell it, then your gain or loss will be quite similar to the loss or gain that the actual underlying product, in this example, the gold did. Now, it's the same story with stocks as well. You can buy stock CFDs in the European market. In the US, it's banned. There are several reasons why. We don't get into that because it's quite complicated. However, what you need to know is that you buy a piece of paper that represents the underlying stock and the stock movement of that. Now, the tokenization is quite similar. So if we want to draft how that actually looks, is that you buy a token on a blockchain. Now, the blockchain is actually contains a CFD, not actually a CFD, but a paper, a signed document that this is going to be your token. So token, paper, stock. This is going to be how it actually looks. Now, this stock tokenization might sound like the future, but actually Robinhood, one of the largest fintech brokerage companies in the world, the CEO went to France, did a major conference, and in that major conference he said that this is what we're going to do in the future, and also it's going to be available for the EU users now. What does it mean? It means that you can buy stock tokens in about 200 different ETFs and 200 different major US brands and major US companies for free. Well, it's not actually free, but we'll get into that in the advantages and disadvantages section. But what we need to understand is that these will be traded 24/7. We'll talk about that too in the advantages and disadvantages period. The technology behind that is now they use the Ethereum blockchain, and that will move to Robinhood blockchain in the next month and in the next years. So it's gonna be their own blockchain that they use for these stock tokens that you can trade 24/7. Also, what they did is gonna be a tricky one, because what they did, they will be able to sell, or they claim that they will be able to sell, and we'll have a discussion about that, but they claim that they will be able to sell shares in private companies that are not listed on the stock market. On the example, it was OpenAI and SpaceX. Now, these companies actually came back after the press conference and said, well, we don't authorize this, so we don't know where this actually comes from. We don't sell any shares to retail investors. But how OpenAI was framing that and how Robinhood was framing that is a little bit different, because OpenAI said we don't know anything about that, so what the hell is going on? But Robinhood said that what they do is that they have shares as an institution in OpenAI and in SpaceX, and their users will be able to sort of utilize that stock portfolio that they have with OpenAI and they have with SpaceX. And let's get down to the advantages of stock tokenization, because there's quite a few advantages that we have to talk about. Now, the first one that I already mentioned is going to be the 24/5 or 24/7 trading of stocks. Now, this is quite a new concept, because there's now what is happening. The stock market opens at X, closes at Y, and then in between you will be able to trade your stocks. In the weekend, there's going to be no trade, and there's also bank holidays as well. Now, with stock tokenization, all these barriers will just come down and you will be able to trade 24/7, so it's going to be quite similar to crypto. The other one is going to be the cost of that, the price of that, the price of actually listing companies and the price of actually trading those companies. Because on blockchain, theoretically, it's zero. So you don't have any commissions to pay to brokerage companies, you don't have any commission to pay to stock markets, to listing agents, to settlement. So none of these charges actually exist. It's going to be free, although Robinhood is going to charge 0.1% for every FX transaction fee, but they say that the actual transaction, the stock transaction or the stock token transaction will be free. Now, the other part of this cheapness is going to be the listing process, because as I said, listing is quite expensive. However, if you do it via stock tokenization, you don't need that many resources. You will be able to list your company for far fewer bucks than if you would do that in a regular PR campaign and all of that and go through all the traditional IPO ones. The other advantages of stock tokenization is going to be the private companies, because you will be able to, let's say that you have a limited company, 3 of you have the 33% share, each of you have that limited company, you trade in, I don't know, you're making pencils, whatever, doesn't matter. What you can do is now, or you will be able to do now, is say, okay, so each of you will give 5%, and that 5%, altogether 15%, will go to this stock blockchain of Robinhood, and that will allow users, like retail investors like you and me, to buy a share of your company, which is a quite new process. It's a brand new process, and that is one of the major advantages of that. And the last, but really big advantage is the tax burden. So let me give you an example. So let's say that you want to buy stocks on the London Stock Exchange. Stamp duty will be charged for that, which is 0.5%. So let's say that you want to buy £1 million worth of Barclays stock on the London Stock Exchange, you will be charged £5,000, which goes to the government. When you sell that, you're going to be charged for the same as well. So it's not really tax effective for the retail and for any other investor. However, if you use stock tokens, there's not going to be any charges, because actually there's not going to be a stock trade, because it's a sort of crypto trade. It's just a tokenization trade, not an actual. It doesn't, so the order flow doesn't go through the London Stock Exchange. It just be on, and it just maintains its place on the blockchain. Now let's get to the disadvantages parts, because there are quite a few as well, unfortunately. The first one is that if we are talking about private companies, and if we are looking through what Robinhood says about these private companies, they say that, yeah, they actually give you a €5 worth of token from SpaceX and from OpenAI, but A, it doesn't represent an actual ownership of the company, and B, it cannot be sold. So basically you have a €5 worth of token, which is, yeah, you have it, but you don't have it on the other side. They said that they will be able to sell those stocks when those companies go public. And those companies will obviously go through the IPO lengthy process, so, it's a little bit tricky one. So, in theory, yes, they will be able to hold, the clients of Robinhood will be able to hold positions in OpenAI and SpaceX, but basically no. The other part, which is the currency conversion and the no exchange fees, sounds good on paper. So let's say 0.1% that you have to pay for the FX fees. It sounds good, isn't it? Okay, let's calculate. So if you buy €100 worth of stocks, then you just pay 0.1%. That's not too bad, isn't it? If you buy €1,000 worth of stocks, in terms of stock tokenization, that's what I mean by that, then you will pay 0.1% for that. However, if you are going a little bit more expensive side, so let's say that you want to buy €3,000, €4,000, €5,000 worth of stocks, and then you compare it to interactive brokers, which they charge €3 per transaction, well, you're pretty much at the same. So if you say $300,000 worth of stocks, then there's absolutely not worth, because 0.1% is going to be much, much more expensive than just paying for the €3 flat fee or $3 flat fee for interactive brokers and some of the legacy brokerage companies. One of the other disadvantages that has is that it doesn't pay out dividends. So on paper, yeah, you own the stock. In theory, you own the stock. In reality, you don't own the stock, you just own the paper. And that paper doesn't pay out dividends. So basically, Robinhood collects the dividends and they can use that money whatever they want. So let's say that you want to buy Pepsi or Coca-Cola. Now, these companies actually pay dividend in every quarter, but that dividend doesn't transfer back to you because you just have the contract that says, yeah, it doesn't pay out. It only pays out dividends when you actually close out the contract or you close the stock token. Well, that could be a disadvantage for some investors that say, you know what, I want to buy stocks for the dividend side. Probably these ones are not the best options for this one. And one of the major selling points of that is the 24/7 trading. You can trade stocks 24/7 on Robinhood blockchain, or you will be able to trade 24/7 on Robinhood blockchain. Now, this sounds really, really good, but if you dig deep on what is the current tendency and trend for actual stock exchanges, the New York Stock Exchange, the American Stock Exchange, Nasdaq, London Stock Exchange, and München Stock Exchange, these are just to mention the few biggest ones, actually on the path to introduce 24/5 stock trading. So if they introduce 24/5 stock trading, that means that maybe that 2 other days on the weekend is not going to make any difference. And I do believe that the biggest disadvantage is another many layers of risk that you have to take at the moment with stock tokenization. So if you buy a stock, what is the risk that you actually take? You take the risk of the actual underlying company. If that company prospers, then your stock portfolio will grow. If that company goes bust, then your stock portfolio will go to zero. That's the only risk that you have to take. Also, if you buy it through a brokerage company, then there's some sort of brokerage risk as well, but that's minimal because they have to put it into settlement funds and those are not held within the brokerage company. However, if we're talking about stock tokenization, what that means, do you remember what I said about it's going to be the stock, then it's going to be the contract, then it's going to be the actual stock token? What that means is there's many layers of risk. That introduces not only just the stock and the company risk that you take and the brokerage company, it also introduces the blockchain risk because the blockchain is only Robinhood's blockchain and also Robinhood chain as well. And they actually have a really, well, let's just put it, interesting sentence in their key information document, which says that poor market conditions are very likely to impact our capacity to pay you. So what that means is they say, well, if there's some sort of market turbulence, we might not be able to redeem your tokens. Now that is a big sentence, so I'll just let you think about that and let that sink in. With stocks, you don't have that. If there's supply and demand for that stock, you will be able. So there's not going to be any point in the next 5 years, 10 years, and there was no point in the last 5 years, 10 years, 15 years, that if you had Apple stock, you couldn't able to sell that. You were not able to sell that stock for what is worth. Now with stock market tokens and different stock tokens and different tokens, whatever the name of that, will have that disadvantage, unfortunately. So let me know in the comments what you think of these stock tokens. Would you buy these ones? What you think, is it the future? Would you take these risks, or would you say, nah, it's probably too much risk for me? And also, don't forget to hit the subscribe button. See you in the next video. Bye.